few things that are more confusing in life than the tax code. Trust me. If you're a healthcare owner, you know exactly what I mean. You're trying to juggle your practice, your household, and then you get blindsided by a massive tax bill. Happens to at least a handful of our clients every single year. Here's the thing you don't need. You don't need more clever loopholes. You don't need more tax tips. You need a better system. So today I'm going to be joined by Jharid Pratt of Granite Peak CPA. He is a CPA that specializes in working only with healthcare owners, specifically veterinarians. We're going to unpack, how to bring order to chaos, how to regain control of your tax system, and finally make your money work for you and not the IRS. Stay tuned. You're going to love it. Practice owners, tired of working hard but not seeing the financial results you deserve? I'm Eric Miller, and my best-selling book, How to Become a Financial Beast, is your game changer. Learn how to maximize profits, pay yourself right, and build wealth outside your practice. Download now for free. Here we go. We are live. Welcome back to the Financial Beast podcast. I'm your host, co-owner Eric Miller, your best financial friend forever. I love saying that. I don't know why it is.
I like that one. I like that one a lot.
That is pretty good. I'm the co-owner of Econologics Financial Advisors. We offer premier financial advice for healthcare owners and their associates. We've been doing that since 2008. You can check us out at econologicsfinancialadvisors.com. And as always, because everyone tells me that is what you're supposed to do, make sure that you guys like, share, or subscribe to our channel so that we continue to, have awesome interviews like we're about to have right now. So, it seems like it's always tax season for whatever reason. And I wanted to make sure that we provided some value in terms of what to do and just this overall area, because it is a very confusing area, especially for a lot of veterinarians and a lot of healthcare owners in general. So I have Jharid Pratt. He is the owner and CEO of Granite Peak CPA. They're the leading tax provider for veterinary hospitals, which is pretty awesome. And you don't look very old, so I don't know how you did that so young, but well done, man. Thanks for being on, and being in the veterinary space as well. We just have kind of a natural affinity in working with veterinarians. I don't know if there was any reason that you picked veterinarians. Did you have a parent, or was there a reason why you got in that space, or it was just I fell into it somehow?
A little bit of just falling into it, right? And as you grow your business and career, you want to feel like you're adding a ton of value. Just pushing paper was never high on my priority list, and I think a lot of accountants can find themselves doing that. Pushing a tax return to one of these big organizations, and you can differ in my opinion, but I have yet to find a veterinarian that wasn't a compassionate individual that truly needed and wanted advice. And they're going to listen. They're going to listen to you if you're providing great value and service to them. So for me, from day one, it was that immediate fulfillment of getting behind the desk and delivering the value. And like anything, I think if you do, a good job, your naming reputation grows. And what was a concentration grew into a firm dedicated exclusively in the space, and just surrounding myself with the right team to help serve our client base.
Yep, I think you're right. You definitely hit it on the head. I think when we've worked with a lot of different healthcare providers, so to speak. When it comes to accepting help, there's something about veterinarians where they're very open to it. They do want to be helped. Some other healthcare practitioners are definitely not like that. But I think you're 100% on that one. So just in diving a little deeper on that. There's 1,000 different CPAs out there, Jharid. What is it about you understanding the veterinary space and the industry makes you more effective than just a random CPA that someone would, find locally?
Yeah, it's a great question, because the tax code is the tax code. The tax code serves any and all businesses, all different shapes and sizes. But I think how you are able to interpret and apply the tax code when you're working exclusively in one field, you're reviewing hundreds of returns every year that have the same flow. They have the same planning points and ideas. So it allows for also within a team and an organization on the CPA side of things, my team is becoming more efficient, more effective because they're having very, very similar conversations versus having a conversation with a practice owner, the landscaper, the real estate agent. Those are such wildly different applications of the tax code. So it allows us to really narrow down, really identify what works well, not just annually, but quarterly. What should the practice owner be doing quarterly, taking a much more active tax planning approach? I always say the worst thing I can do is be a historian in my job, the coulda, woulda, shoulda. Hey, it's year end. Make sure you do these 10 things. I think if you're strategically every single quarter, here's 3 to do, chip away at it, check them off the list. Next quarter, another 3. That's what makes it special, being veterinary exclusive. And the other thing is I think of my team is my bookkeeping team. We have 10 individuals that do bookkeeping excellent, but they also come directly from practices. So a couple former practice owners, a couple practice managers, a couple CVPMs. We speak your language. We know the chart accounts. We know and have worked with all of your vendors. So, hey, why is this vendor charging this? Why aren't you taking advantage of this? We're not just putting numbers into a balance sheet and income statement. We're able to analyze them as the charge happened, live time, real time. So that's what makes us a little bit unique. And then, most recently launching the dedicated payroll platform, VetPay, as a sister company to Granite Peak Veterinary Advisors. Now we get to see trends, turnover rates, overtime rates. Just, hey, what is that CSR getting paid in this geography, this part of the country? What is the tax getting paid? It's going to allow for a ton more value, a ton more information for the practice owners right at their fingertips.
It's like getting all that intellectual capital in that industry and then showing people how to use it so that they can be more profitable and obviously have more money at the end of the day for themselves.
Well, I think that's the biggest thing that we do, right? It's not anyone can read the tax code. Anyone can read a balance sheet. It's the implementation. It's the then what of like, hey, my costs are high or my people costs are out of line. Great. Any CPA, any good CPA with a pulse on cash flow can understand when expenses are a little skewed, but it's all right, go try these 3 things in your practice this quarter. If one works, great. If they all 3 fail, I got another 3 at my sleeve that we can try to roll up next quarter. So it's definitely the then what of what to do, what to implement, how to implement it, that I think is just separates us from the rest.
Yeah, someone read me a quote. I don't know exactly who it's from, or I'll probably slaughter it. But they said people don't pay for information; they pay for organization and accountability. And I thought that was pretty poignant because it is true. I mean, like everything like that we do, it is all out there. I mean, you can chat GPT anything that you want to right now. I mean, it's out there. Okay.
Yeah.
But that's not going to, at least from our world, it's not going to show people how to save more money. It's not going to show people how to, implement things that are going to make their financial lives better. I mean, I think you actually need a live person that's actually running you consistently to do that. I always have a joke, like a lot of veterinarians that we've seen that are in trouble, they just stop paying attention to their money and their money lines and their money systems that they have set up. And you can't do that. It's like, that's
no fault of their own. They have so many things. They're balls bouncing all across the board. So you do need those key players and those key seats to kind of be the quarterback for the financial services, the quarterback for the accounting and finance relationships. So no, I agree. And trust me, I agree with the way technology is going. I think we talk about it all the time is technology is going to disrupt us. Technology is going to do away with the CPA. I don't know. I'm doubling down on the relationships. I don't think you can replace people, and the connection you can have with someone will will allow us to do our jobs better, 100%. But I just can't see the people side of the business going away.
No, and if people want to go that direction, they can. But that's kind of why I came up with that best financial friend forever, because of your BFFs. Just because when I was an advisor, that's what I found. Like that was the strongest relationship, was that person had enough trust in me. We would be able to talk through certain situations, and because life isn't just about numbers and formulas and calculations and those things. They're important. We got to track that stuff. But it's definitely deeper than that. And it's good to see that you have like a service model that allows for that to happen, because I don't think there's anything worse, at least the conversations that we've had with, you know, veterinary owners, where it's like, oh, here's the conversation. Congratulations, you had a banner year, Dr. So-and-so. You owe $55,000 to the IRS. How do you want to pay that? I think those are probably some of the most maddening conversations that we've had with people. So you
As they
shouldn't have
should
to have
be.
that experience. Yeah.
As they should be. No, if you're going to owe that, your 55K example, if you're going to owe it, great. I want you to know that you're going to owe that in September of the prior year. So we're bracing for it. So we're planning for it. And I want you to feel confident that we've done everything that we can to minimize that burden as much as possible. It's always a balancing act, right? We want to be more profitable in practice, yet we don't want
Yep.
to pay more taxes. So how can we get the best of both worlds? Sometimes you can't, but most times you can with strategy. Most times you can, defer and delay expenses or accelerate all those little things. It's the tax bracket play, right? How long can I stay in the bracket that I want to be in?
And they add up. I think a lot of people are always looking for that one big quick fix when it comes to minimizing their taxes. And I'm like, I'm sure that they're out there, but it's a bit like chopping wood to that degree. You probably have some strategies that, are geared to save you, $5,000, $7,000, $8,000. You have some strategies that can be more impactful. And, if you really want to like extend the risk out and try to do something that's going to be a little bit more, how should I say this, moderately aggressive, so to speak. There's strategies out there, but, you got to be able to sit across from an auditor and say, yes, that's okay. I understand that. But is there anything that kind of drives your basic philosophy around the tax code, or just in this area in general? Like where did that come from, or was it just an area you were always kind of interested in?
It wasn't my first passion. My first passion was behind the stove top. Thought I was going to be a chef, and then quickly realized I didn't have the palate to do that. So,
All right.
it's exciting. One, because it's always evolving and changing. We just most recently with the tax bill changes. I mean, potentially every administration, you could be looking at sweeping changes, and how do you stay in front of that? How do you implement with your practice owners? What's now best practices? But to go back on what you said, sometimes our legacy clients, start to forget because we have such a good routine. You're taking advantage of all the little things. So it's like, hey, there is no one amazing deduction, right? It's the stacking of all the little stuff. In some years, especially for the newer clients, because they haven't done it at all, it's like, wow, that's impactful. That drastically reduced my tax bill. But years 4, 5, and 6, you start to forget, hey, I'm already inherently ahead because I am doing all of these best practices within my financial statements. So I think it's more just calling attention to that and saying, hey, remember this. This was in the program and plan. You're staying on it, and it's still yielding you the good savings that you want.
Isn't there like a stat that most people should, if they're looking at their current CPA and their current situation right now, is there anything that you point to, like what's your overall effective tax rate? Like, is there anything that that people should use to gauge their current relationship with their CPAs? Or should it be more looked at as like, how frequently are you talking to them? What's their cadence for meetings? What are you guys going over? What's your opinion on that?
Gosh, it's both. It's both because, say a prospect comes to us and says, oh, my prior accountant saved us 12 grand in taxes last year. He told me to buy a big piece of equipment.
Yeah.
Great. What effective tax rate are you in? Were you in a 12% bracket because you just started up this year, where I would have told you don't spend the money, wait until next year when you get into a 24% bracket, and that deduction is going to yield you so much more savings. So I don't like the, hey, let's spend money at year end. Let's go and rush and buy some equipment. Great. What's your effective tax rate? It has to be always around effective rates. So knowing where your dollars are spent, because a deduction, as you know, is not a dollar for dollar reduction in tax. Credits, right. Sure. Credits are great. We all want credits, but there's only a limited amount that come into play. Timing the deductions, effective tax rates. And then on cadence, we are big believers that if you're not meeting with the client quarterly, something's going to fall through the crack.
Amen.
So in these, I tell them, hey, it could be a 20-minute meeting, it could be an hour meeting. You're going to dictate that conversation on what you have going on. If you tell me, hey, everything's great, I looked at the balance sheet, financials, everything's tracking out. This is just a touch point. This is to ensure that we're still aligned come year end. But quarterly is going to be our cadence, The other thing I think we do a little bit different is we say quarterly, just to ensure that there's dedicated time on the calendar, but it's truly unlimited access to me and my team. We don't hourly bill; it's a subscription, all inclusive model. The more conversational that text, emails, calls, whatever the client prefers, we want to understand that cadence. We want to, capitalize on it.
Yeah, I love that. I think that's so missing right now. Again, your practice, especially for people that are growing and more profitable, and all of a sudden they had three great quarters, and they're like not really setting aside enough for taxes. You got to adjust. You got to be able to be nimble, and you may have to pivot and such. So, and yeah, I always made a joke. I go, if you're CPAs, and again, I'm not a CPA, just so everyone knows, I'm not a tax expert, so to speak, but I've heard enough people that have complained at the end of the year, like, where I knew the advice for most CPAs was, hey, either buy something you probably don't need, or just try to, stash as much money as you can in a retirement fund as your sole tax, deductions or strategy. I go, that's probably kind of lazy tax planning, because there's other things to do. Obviously, retirement funds are used. They're awesome. I mean, you should use them for reduction of taxes, but you just can't rely on just two things every single year. And so that's kind of funny that you said that. We'll get to kind of some basic deductions and things that maybe some veterinarians overlook, but there's a couple, like, I want to know, this one I've always kind of curious about, and I always want to know CPA's viewpoint. Filing. Like, I'm sure you have people that file by April and you have people that file in October. Is there any real advantage in waiting?
Gosh, so that, talk about myths. The myth of, if we extend it is audit proof, or you're less exposed to an audit. I have no clue where that. There's so many people on like TikTok and social media nowadays with these crazy assumptions. But I'm happy to be challenged by it. But one, audit risk and audit exposure is down across the board, right? The IRS is so backed up and delayed. Very rarely do clients ever get audited, and if you do, there is no correlation between timely filing or extended filing and audit exposure. So again, happy to be challenged. Show me the proof. I haven't found it. Here's what I don't want to be doing, is talking about last year's taxes in August.
Yeah.
Like there's no value to it. If you give me all the information, we have clean information, we get all the business information, get all the personal information. Why are we extending it? Why are we saying? Now, some clients, because of outside investments, require it. I get that. Nothing you can do about it. Some, hey, we're playing catch up. We don't want to rush. We want to make sure we're strategic and have a few more conversations. But we want to get the filings in. We want to get the filings processed and done. And we want to move on to the current year where the value is. A tax return is a report card. A tax return is a byproduct of all of the work you've done the prior year. So too much emphasis is being put on the results of the tax return. You as a client should have already known the results. You should know if you're getting refunded. You should know if you owe money and what the range is going to be well before the March 15th or April 15th deadline.
Yeah, absolutely. I've just always been curious. I hear that all the time, and I've never seen like an inherent advantage of waiting around. And yeah, I don't ever want to do that. So, okay. Another thing that happens a lot with people and I don't know what the frequency is. Maybe it in my first, well, I'll age myself. So I started working with veterinarians in 2008. I probably didn't have anybody sell their veterinary practice for probably almost like 8 or 9 years.
Mm.
And then once 2016, 2017 hit, it's just been a water fountain, of people selling. We'll kind of come back to that. I want to talk about like embezzlements and things like that. Have you had much experience with that? Is there, but I have, that is a problem that I saw early on. I don't know if I see it as much now, but have you seen that with people where they actually got ripped off and embezzled from?
I wish I hadn't. But I have. And it's never fun. Why is it? Lack of controls, lack of checks and balances, too much autonomy. I mean, I'm a big believer in you give 100% of trust immediately to employees, And obviously, you hope that those employees honor and maintain that level of trust. But even with that, there has to be some stock gaps to
Yeah.
understand where the flow of funds is. And the practices that we've seen that with has been practices that we've onboarded that have been so far removed from their financial statements, haven't had the conversations with their CPA, just let the results happen. Hey, you made 100 grand. Great. What's my tax bill? It's all historical. There's no active discussions of working capital. And then on the bookkeeping side, it's general bookkeeping. Revenue is revenue. COGS are COGS. There's not that granularity. You can catch embezzlement if you're tying back to your practice management report, because the practice management shows all the ins and outs. It shows credit card cash and checks. If there's a disconnect every month that we're seeing, hey, why was that revenue keep being 10 grand short, 15 grand short month over month? Explain it to me. And we can't say timing is the issue. Something else we have to double click, scroll deeper to figure it out. So I wish we had it. Is it common? No, it's not common, but unfortunately, it seems to be at least one every 12 to 24 months that's really impactful, that practice on. It sets you back for years if you hope to be able to come out of it.
Yeah, it does. It just leads me to, you cannot give responsibility to financially irresponsible people. And I've seen, a lot of people just do that with their practice managers and others alike. And it's just kind of sad to see. When it comes to exiting right now, I mean, I'm sure you've had a lot of veterinary hospitals that are exiting. What's your role in that, and how important is that? And do you have any thoughts just on this industry trend right now? And do you think it's going to continue? I'm sure it will. I have no doubts that it will. But what are your thoughts on that? What are some things that you guys can do to help prepare people for exiting?
Yeah. So I think, why was that? Why did we have such a spike in sales in that time frame that you indicated? It's the introduction of private equity money, right? And there was always private equity in the space, but I mean, the list grew from a common 5 to 40, 50 plus different private equity firms that were investing in veterinary practices and vet med. And we saw it around the 21, 22, 2023 calendar years. Now, will that go away? No. But I do think corporate consolidation, you've seen in the multiples, the valuations that these buyers are buying at have drastically reduced. There's always going to be a market for private equity, corporate consolidation within vet med. My opinion, I think the pendulum has swung though. I think we're doing a lot of work right now with associates leaving their practices, wanting to create something on their own, partnering up with someone. So associate buys, private startups. I see that uptick. Even with rates where they are. So again, will there always be a corporate market? Absolutely. But private practice is always going to remain, in my opinion, because of how personal these practices are. They're built around the doctors. They're built around the support teams. They get so ingrained within their community. It is really hard for private equity long-term not to kind of remove that a little bit, to focus more on margins and less on community involvement.
Yeah, I think you're right. I did see one study, because it's everywhere. And, I hear it all the time. Private equity is going to take over and blah, blah, blah. But I think it's still a pretty fragmented market, meaning that there's still a lot more privately owned practices out there than there are even consolidators that could potentially even buy them all. So, and it's good to hear that, because I was kind of concerned about that, just because, again, these are some of the things that you hear from current owners, like the next generation. Of course, I think everybody always says that next generation doesn't want to work as hard as we do. They don't want to do surgeries, and they don't want to do, all the blah, blah, blah. Like, oh my God, please. I don't want to be a grumpy old man at some point in time and say that. I think there's always going to be bright stars coming up. You just got to be able to find them and get them to engage and give them a path forward, because look, man, I think we're just rebellious by nature. We want to own, we want to be the manifest destiny. We want to be the captains of our own ship, so to speak. And you're always going to have people that are going to want to do that. And so it's good to see that, and there needs to be some mentorship out there for these young associates that are coming up. I don't know if they're teaching that in veterinary school at this point in time. I actually don't know what the hell they're teaching in veterinary school at this point in time. It certainly isn't personal finances, that's for sure. But that's my little rant, I guess.
Now you can say that. It's funny. I'm laughing at that one because I caught myself not far removed from younger generations, but caught myself say, "Oh, the younger generations." They didn't.
Yeah, you're about there, aren't you? Yeah.
Maybe it's not that. Maybe it's just, hey, maybe I need to find a better way to identify and communicate with that generation. There's a lot of skill sets that they have that I don't have.
Yeah, there is.
So it's how can we leverage each other and make ourselves both, most effective. On that though, let's not live in absolutes either. Like there can only be a corporate market, there can only be a private market. Look, they can both coexist. I think there's some practices that went corporate, and good for that. It made a ton of sense for both parties. It propelled that practice into massive growth. So I'm not pro or one or the other. I think they both do live. It's what's right for that specific practice, and what role did we play? It's comprehensive, like every service we provide. The one issue we have is a practice comes to us and says, "Hey, I'm ready to sell." Well, we're too late. Like those conversations, we say 24 month ramp to get the financial statements right, to get the EBITDA, that profitability, that cash flow where you want it to be, and to ensure we truly understand the transaction that you want to step into. So that's our runway: is give us 12 or 24 months. Let's ensure that we're not chasing deductions, right? We're not just wastefully spending money or buying a brand new piece of equipment and you want to sell in 12 months. That makes no sense. The return on investment is not going to be there. So a lot of those conversations we have had and are having with practice owners is, where are you going? Where are you going? We might ask at every Q2 call, is like, what's your timeline? Hey, I just told you last year it's 5 years. Why are you asking me again? Because I still want to make sure it's 5 years. Yeah. Because the second it goes to 2 years, my radar's up. It's like, okay, we're on the clock. We're on the clock to get things right.
Yeah. Do you have target? I've all heard industry targets for COGS and, DVM pay, staff pay, facility expenses, profit margins, at a certain range. Do you follow those? Do you look at the individual practice demographics when you're consulting people to, because again, profit's it's not a dirty word. I tend to find that a lot of veterinarians will forsake themselves and their personal lives for the practice, meaning that they won't pay themselves what I think that they're worth. They won't. They think the practice is more important than their household, and I fundamentally have a disagreement with that. I think the practice is there to actually serve the benefits of the household. Create a really stable family unit and make sure that they're able to, build multiple income sources and other things. And the practice obviously is the engine that should be able to do that. And
I strongly believe with there, because what you just described is a job, and you don't go into practice ownership for a job. So you're 1,000% right. Is this should be the conduit for a lot of good things just outside of a W-2. So big believer in what you just said there.
Yeah. And the bottom line is that the practice is an investment, and you should treat it like that and not just a job, which unfortunately we see way too many people do. I guess in terms of like profitability, is there a target you try to tell people that they should be at, or is it more nuanced than that when you're working with people?
Guardrails, not absolutes, right? Guardrails is, hey, industry says we should be at X, we're at Y, and I need to bridge the gap. I need to be able to explain it. If I call it EBITDA, normalized earnings, not profitability, normalized earnings, because you could have a practice that maybe they're getting a little aggressive with maybe some personal expenses they're running through, which is going to deflate profitability. So if I'm going with the bottom line number, that's never going to be kind of the end all be all. It's the normalization. It's the add backs of owner discretionary non-recurring items. The bell curve says 14 to 18% normalized earnings is where most practices should fall into. So if I'm under 14%, why? If I'm over 18%, also why? How do I maintain? How do I try to squeeze out a few extra points of margin? So again, where we're at in the business life cycle is critical. I'd rather run low, lean margins early to build a solid base, a foundation with my team and organization. So as my revenue ramps, I have the runway to ramp up with it. But those mature, growing practices, years 3 and beyond, really should be at 14, 18%. And if you're heading into 2 years out of sale and we're operating at 10%, again, we're already behind the 8 ball there, because that's A buyer's looking at 3 years numbers. Why are we so low for so long?
Any rules of thumb that you have on like having corporate reserves, business savings? And I mean, obviously, we from a personal standpoint, people are, I have 3 months of emergency funds for your household, or 6 months, or whatever that kind of number is, which is again very arbitrary. Do you have anything that you look for or you try to target in terms of business reserves?
2 to 3 months of business operating
Okay, good.
expenses, people costs, general and admin. Why? And I might tell a practice owner that, and they're very conservative and say, "Hey, 3 months, no way. I want 6." Fine, that's specific to you. And I might say
Yep.
3 months to know the practice owner, and they say, "Hey, I'm good with one. We're going to make money." But 2 to 3 should be that reserve that you have at all times, based on again where your operating expenses are.
Yeah, I like that too. What I noticed you kind of said some people are a little bit aggressive on some of the personal expenses that they run through the business. Where do you see people toeing the line a little bit? That is where you're like, you better be careful on that.
It's all the stuff you read about, all the audit exposure ones where, hey, we're fine with putting your kids on the books, but when your kid is a newborn and we're paying that child 15 grand to model, I mean, well, let's justify that a little bit better than a
Yeah.
modeling expense. Or do I really need the $90,000 car? I don't provide any mobile services, any at-home euthanasias. What's the true business percentage for that vehicle? Again, fine deducting the car. Business use, we're going to usually limit it to about 60%. And again, what does that do? Because if I go and spend on that $90,000 car, you're not going to get a $90,000 offset on the children. Let's make them have qualified positions. Let's
Yep.
keep it within a realistic range. Usually, most kids 5,000 to 7,500, so they can probably fund a Roth IRA.
There you go. Yeah.
But it's supported with, oh yeah, you know what? I'm teaching them how to clean, and they're helping me. We had one practice owner, a good friend of mine. His daughters go there every day after school, and they become a personality within the practice where the clientele looks forward to, seeing them and ask them about their day. And to me, that makes all the sense in the world. That's the stickiness that you want with your client base. I'm good with that. Can't get behind the $15,000 baby model.
Yeah. Bottle 15 grand. Oh my gosh, what people try to get away with.
Yeah.
What's your outlook and any, a lot of the tax law coming down, anything exciting, anything that people should be wary about, take advantage of, anything that you see there? I'm sure you kind of keep your eyeballs on that.
I just think it gave us clarity as to what to expect over the next couple of years. It extended some of the provisions that were set to sunset or go away. Um, the biggest thing for practice owners since 2018 was that it's called specified service trade or business, the qualified business income deduction, an additional 20% deduction on profitability. But like anything, there's carve outs, there's phase outs, there are limitations. So making sure annually, we talked about effective tax rates. Can we drive down profitability enough to stay within that income limitation to maximize on the qualified business income deduction? What else has changed? The bonus depreciation, how we deduct and depreciate equipment, that came back to 100%, which was good. And brackets stayed the same. We'll see some for those charitably inclined. We'll see some charitable contribution changes for next year, not this year. So how and when we give money, I think, especially in the year of sale, should come into the conversation. Those are the kind of highlights. It was vanilla for the pass-through owner, the tax law change in the big beautiful bill. There wasn't drastic sweeping changes like we've had in prior years. That you really had to kind of do a full reset of what are our expectations for year-end planning.
Yeah. I'm sure you've had this happen. That'd be like my last question. When people do come to you, because look, I mean, the internet's the internet and TikTok is TikTok. And of course, the best financial advice you could find is on TikTok
It-
but when you hear people come to you and say, well, these people are whatever tax deduction of the day that comes, some aggressive tax strategy that comes along that sounds reasonable. Like how do you treat that with people? Is that something where you'll just Like, will you look at it? Will you do the research on it? Or you probably know a lot of them, what they are? There's like, captive insurance companies and, trading for, I mean, all these things that people can do. Like, what's your response to most people when they bring that to you?
Yes, and you're right. I mean, the IRS issues every year with the dirty dozen list, right, of all the most common pitfalls that businesses are diving into. The tax code at times can be black and white, and then a lot of times it can be gray. It can be up for interpretation. So I think it's not immediately shutting down the client and their idea or what they've heard, but walking them through, maybe providing a case study is like, here's this situation, but here's how it's been applied. Here's how it's been interpreted with a current client or actual, law. So I think it's fine to play in the gray, but I will never take a position on my name's going on those returns. My staff's names are going on those returns. I'll never take a position that puts the client at risk or expose penalties or an adverse tax consequence. It's not worth it. At the end of the day, it's not worth it. I want to go to sleep at night. I feel good about the job I'm doing. So again, I don't want to pay taxes I want to pay as little as I can. And I want you to pay as little as you can, but I'm going to do so methodically to my interpretation of the code and supported by what others have done, what the IRS suggests that you can do.
Very good. And we'll end off on that note. Jharid, how do people get a hold of you if they want to connect with you and talk about your services?
Yeah, so we're available. We're always at the trade shows and events. We had Bet Together here come out that we're really excited about in October in New Orleans. But Great Peak Veterinary Advisors, visit our website. There's a calendar link embedded within there, right, where you can go and schedule some time on my calendar and have a 30-minute conversation. The other thing we do is we'll review 2 years of tax files and give you the confidence, no cost, no commitment, just to ensure that what's been filed has maximized the tax code as much as possible.
Very good. Jharid Pratt, Granite Peak CPA. Thank you very much, man.
Appreciate the time. Thank you.